Okay, let's speak to our Turkey analyst, Yusuf Erim, who can join us now in the studio. So I think a lot of foreign observers will be surprised, first of all, that Erdogan had said, we're not changing interest rates. And here comes the central bank showing its independence with a 625 basis point hike.
We saw Erdogan just a couple hours ago at a meeting of shopkeepers and craftsmen talking about interest rates. He expressed his displeasure about how high they were. He said that he wanted to see them lower. Then we see the central bank just a couple hours later with this huge move, 625 basis points. I mean, the market estimate was between 300 to 500 basis points. Nobody was expecting 625 basis points. This is a huge move. It's basically a declaration of independence by the central bank, and this is what investors want to see. So the central bank has gained a lot of credibility right now in the market, saying, hey, we're independent, we're going to do what's necessary. Now, in August, right after the inflation print, it was 17.9%. The central bank had hinted that it's going to get aggressive and go towards monetary tightening. So they're sticking to their word, and they delivered what the markets have been waiting for.
Okay, this may be what foreign investors want to see, and it might strengthen the lira further, but it could have very serious domestic consequences because large Turkish companies could now crumble under their debts, repaying at 24%.
That's actually another topic that President Erdogan touched on during his speech before the central bank action. He was talking about some banks wanting 50% interest rate on loans, and how the faucet, the loan faucet, the credit faucet was slowly beginning to close. And he was saying, how are these companies going to pay back these loans at 40, 50%? Do these companies even have margins that are 40 and 50%? So yes, it is a problem domestically as well that needs to be solved and looked at closer.
And then you have other analysts that say the problems in the lira have very little to do with interest rates. It's not about Turkey's monetary policy. It's about the relationship between Turkey and the United States and the sanctions that are continually being threatened by the U.S.
When we look at Turkey's economic indicators, they're not as bad as to warrant what's happening with the Turkish economy right now. U.S. sanctions are definitely playing a very big role in what's going on right now. They're placing a lot of pressure on the lira. And even with this massive move, we saw the lira go all the way down to, we saw the U.S. dollar go all the way down to 6 lira right after the move. And we're seeing it creep back up a little. It's back up at 614, 615 as of a couple minutes ago. There's a little profit taking. The markets still want to digest what's going on, but we can't speculate politically what's going to happen in the future with more sanctions. So right now we can only go on what the central bank has given the markets. It's a big 625 basis point increase. For now, that's making them happy, and we're going to see how the politics plays into the economy going forward.
So Turkey can control its monetary policy, but it can't control the behavior of the White House administration.
Can't control Trump.
Okay, thanks, Yusuf.